Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, January 6, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We had a gap higher open and we had somewhat, not in total, but somewhat of a crap out situation by the end of the day. The market hit what we call in the trading parlance overhead resistance and had a subsequent pullback. This is something we discussed in real time in the live room today. She was coming back to run a test of an important place. We had the important place identified and she finally pulled back from that place. But wait, there's more. You're going to be amazed at what I'm going to show you in a moment. Before we do that, let's just get some housekeeping on the table. We've got a 4-day week this week. Why is that? Because we have Jimmy Carter's funeral. It became a national holiday. Markets are closed on Thursday, so we'll be open Monday, Tuesday, Wednesday, and Friday of this week. 4-day week. Of note, write it down, put it on a sticky. Now, I want to show you something that's going to boggle your mind. We're talking numbers. For this exercise, we're going to use the futures contract, the E-mini, the ES contract. We're going to take a pivot low from Thursday, January 2nd at 58.74.75. We're going to fire up the magic calculator. We're working with a pivot low, so we're going to put in the value. 58.74.75. We hit calculate. Now we're going to zero in on a couple of things. The big picture is we don't really care about all these numbers. We only care about the ones where the market's in close proximity to. So if we go back to that, we could see that from an hourly chart perspective, the low in the morning session right out of the gate was around 6,028.29. The open was about 6,032.33. So we're zeroed in on where the market was this morning. So we're going to be interested in the numbers around that area. So if you take a look at the market at 8:30, 9 o'clock in the morning, here are the futures. This is about where it's going to open up. We go back to the magic calculator and you say, all right, well, what was a couple of numbers around that area? 6,029.04. And these are purely mathematical numbers, so we're going to round these because futures go a tick is 25 basis points. And then the next one up is 6,067.93. We'll round it up to 6,068. So we've got 6,029, 6,068. Write those down for a moment, put them on a sticky note. 60.29, 60.68. Now, here's that same hourly chart with those numbers on the board. Let's blow it up a little bit. Look at a 15-minute chart. So the low of the session in the morning around the opening bell was 6,028.75. The magic calculator came out with 6,029. How you doing? But wait, it gets better. The high of the session was 6,068.25. The magic calculator was 6,067.93, rounded up to 6,068. How you doing? Squared. Is anybody using the magic calculator? Yes, there is. How about Ron W? Hey, Dave, thought you would appreciate this. When I did my ES numbers today, I used the magic calculator to come up with an ES number for today's numbers. So I took the pivot low on January 2nd, 25, 58.74.25. Ours was slightly different by a couple of ticks. Doesn't matter. And came up with 6,067.93. Sound familiar? Or 60.68 rounded. The high of today and so on. This is what we're talking about. He goes on to say, truly amazing. I wish it was earlier in the morning, but I'm in awe of the magic calculator. Pretty remarkable. How you doing? It works for stocks. It works for futures. It works for commodities. It works for anything you want it to. It does have some limitations, but not many. You learn how to use it. There's an instructional video in the back end of the learning portal. You get access to the magic calculator. You're off to the races. Going back to the daily chart of the S&P, so what did she do? She came up, spiked through the 20-period moving average, tried to recapture all the moving averages, hit a magic calculator number, and was summarily rejected. For those traders that have taken the MSF Masterclass and gone through the cycles lesson, we did a forecast in there. We did a forecast of 2025. We have expectations based on the forecast. We're looking for a pivot. Weekly chart perspective, last week she touched the 20-week moving average, bounced off of it. She's in an uptrend. The trend is your friend until it's over. 4-hour chart, speaking of moving averages, into the 50-period moving average. Again, on this chart, the last moving average in the line of defense. Tried to get above them all on the 3-hour chart, couldn't pull it off. Into the 100-period moving average, also on the 2-hour chart, happened to be the last moving average in the line of defense. You could also see there's a gap looming up here. So if she goes up again, she's going to be headed for the gap. Therefore, this area, second time, not best time, first time, best time. The gap is now considered unfinished business. Hourly chart, last moving average in the line of defense, 200-period moving average. You find a common theme when you start to look through all the charts. They gave it the old college try to get through all the moving averages on all the charts and were rejected. Doesn't mean they won't be back there tomorrow, but for today, they were rejected. Just so happens, those moving averages coincided with a magic calculator number that had nothing to do with the moving averages. How do we know that? Because the magic calculator took its results off a pivot low that happened on January 2nd when the moving averages were nowhere to be found. We'll give that one a funny how that works. Did we have a beat on some numbers inside the numbers today? Well, you check out the 9:55 post and it shows up here more than one time. Obviously, just pointing this out. Above 597.45, which was the bull pivot. Staying above keeps the door open for 599.50. What was high of day? 599.70. We'll give that one a funny how that works. All coinciding with the magic calculator as a standalone situation. Just wanted to point out some important things. Pause the video. Read the notes. Go back to the chart and double check the work. It's all in here from a commentary perspective each and every trading day. 599.50 is important. It was a target and is overhead resistance. The bull case disappears below 597.45. The bull case disappears below 597.45. This is a 5-minute chart. Right of the vertical is today's activity, actually over here. And just take a look at this area here and how important it is when they got back there in the mid part of the day, 597.45. Tried to hang out, tried to recapture it once they got below, tried to recapture it, retested it, and then they fell away. The bull case disappears below 597.45. 599.50 was overhead resistance. Funny how that works. We had no stocks on the move today. However, we do cover a list of a dozen markets. This is there for Inside the Number members and live room members. It would behoove you, and behoove is a technical term, it would behoove you to take a look at the magic calculator. We can't leave out the automagical swing trade system, lazy swing trader. She picked up shares in IYT. You can see right up here, nice gap higher open today. First profit target achieved. Now she's a risk-free, emotionless trade. Same or similar goes for JP Morgan. Exited first profit target today. Now a risk-free, emotionless trade. Lazy swing trader automagical algo system. Base hits, base hits, base hits. You never know which ones are going to give you the doubles, the triples, the Whopper Juniors, the Grand Salamis. You never know which ones are going to give you the rocket ride. What's going on over in Camp IWM? After all the hoopla about the gap higher open this morning, the IWM, or the small cap space, and we did flag this in the live trading room, they were laggards. They were up early, but they were lagging the S&P and certainly the NASDAQ. The semis were a whole different ballgame. We'll get to that later. But Camp IWM finished up 9 cents on the day. We're going to call that FLE flat. And interestingly enough, remember, my favorite market leading indicator didn't even get to its 20-period moving average, which is down sloping. Interesting, and not the last moving average in the line of defense. So what we have here is a bearish, wedgish situation. Sure, they can continue to bounce it. We can draw it in a number of different ways. You can do this and say there's your channel, and you have a move downward. That is the flag, and a flaggish situation. This is the flag pole, the move down, and the flag is over here, flaggish, could be flat, could be a wedgish, doesn't really matter. These will generally result in an ensuing move in the lower or southern direction unless they do what? Unless they break the chain. They start getting above this channel and above the 50-period moving average, above all the moving averages. Well, guess what? Then they will have broken the chain. You find them above this big-time breakdown candle high, there's no more downside. They're going higher. That's the way this thing works. That's called breaking the chain. Write it down. Put it on a sticky note. What about the folks down at the transportation department? Same routine. Didn't get to its 20-period moving average. Interesting piece of information. Again, second favorite market leading indicator, a number one canary in the coal mine. What do we have here? We know we have an important place down here at 15,730, give or take. She's shown us that once, twice, 3 times running. We also, and we're going to give it a name, we have some kind of a bear box situation going on here. Now you get out of this box and above these moving averages, she will break the chain. Above this big time breakdown candle high, and forget the chain, she's going to be up into the 50-period moving average before you know it, and higher. But right now, that's not what's going on. What's going on is she's contained in this bearish box. So she was up 28 points today, was the transports, but it was less than 0.2%. Second favorite market leading indicator, a number one canary in the coal mine. Weekly chart, big move down, putting in a weekly bearish wedgish situation. These things take time. She's either going to continue doing this, or she's going to want to run a test of this big time breakdown candle high up at 16.7, give or take, in that ballpark / neighborhood. What about the Q people? Anything wrong over here? Nice jump today in the Qs, got above and stayed above the last moving average in the line of defense, or the 20-day or period moving average. So we'll certainly give the Qs the benefit of the doubt and say she's bullish until proven otherwise. There's a gap up here about 529.5. She was in the neighborhood today, didn't quite get there. Doesn't mean she can't, won't, or will either way. Just stating that there's some unfinished business with a gap above around 529.60. Anything wrong with the Qs from a weekly chart perspective? Absolutely not. Above all the moving averages, trend is your friend. This 503.50 was the most recent breakout area. Last week came close, ripped it higher by today. That is an important area. Next time down, she came too close. It's a first time, best time situation. Consider it tested. What about the financials? The XLF down 15 cents today, contained by this convergence of moving averages, the 20 and the 50. You got a bearish, wedgish, flaggish situation. You draw it out like this and you say, hey, it is what it is until proven otherwise. Until what? Until they break the chain. On this one, what's it going to take to break the chain? Well, we'll use the last breakdown candle high in the sequence right up here. They get above there and stay above there on daily closes, and she will be breaking or have broken the chain. Then get above 50 bucks, and it's over. The correction's over. What about Smash Mouth? Look at this situation. We've been looking at this triangle pattern for a long time. Today, she broke out above the triangle pattern. Remember, this is a weekly chart, but remember, once she gets to the apex, time is up. This week was really it. This was the last week she could really stay in. Maybe one more if you stretch it out a little bit, but that's it. She was going to break up or down one way or the other. So she broke in the direction of the trend, up. If you go to any of my teachings, a triangle pattern, and I don't talk about this a lot, but they will typically, not every time, nothing's perfect, we're not in search of perfect, but they will typically break in the direction of the existing trend. How you doing? Welcome to the party. So where'd she go in the daily chart today? Ran a test at the next important place, pivot high, spiked it, pulled back a little bit. Doesn't mean she will or won't get through tomorrow. We're just stating what happened today, taking her at face value. Up 3.3% today, over $8. The SMH, or Philadelphia Semiconductor Index, is generally a pretty darn good proxy for the tech space as a whole. How you doing? Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.